I raised 1.5. I raised a total of 3.3 million. Yeah.
Wow.
So, but that's the mentality that you have to have, right? So, okay, how long is it going to take you to from the initial conversation to getting somebody to actually write you that check and put it into your bank account? Well, they're not going to give it to you without doing a whole bunch of due diligence.
Unlock the secret sauce of millionaire entrepreneurs. This is your exclusive VIP pass to the hidden world of the ultra successful business owners. I'm Chad Kaderi, CEO of DashClicks, and welcome to Behind the Revenue. What's going on, everybody? Today we have Mr. Mikael Dia from Funnelytics himself on with us.
What's up?
Mikael, just for some context, if you could take like a minute or two, tell the audience a little bit about yourself and what is it that Funnelytics does.
Yeah, so no problem. First of all, thanks for having me, man. I'm looking forward to our chat. We've been friends for a long time, so it'll be fun to catch up and talk a lot about stuff. I'm a digital marketer at heart. I've been kind of doing digital marketing for a long time. Really, I'm an entrepreneur at the end of the day, but my core skill set is digital marketing. And one of the things that I always kind of struggled with was how do I visualize my marketing funnels and then actually understand performance of those. So we built a tool called Funnelytics that allows you to visualize your marketing strategies, your marketing funnels, and then overlay all of your data on top so that you can see what's working, what's not, where are the bottlenecks, and then you can optimize those and make more money from your existing marketing spend. So
from marketer to software CEO, right?
Yeah.
And I've literally taken the same path, which is funny. So I'm in the same boat.
It's an interesting journey for sure.
It's quite an interesting journey. You know what? My first question that I have for you, kind of liaising on into that, is what was that like for you? Like going from like being a full blown marketer, because you came from a marketing agency, right? That was like where you originally
started. I used to run a marketing agency.
Yeah, same thing. I had a marketing agency in 2009. You had a marketing agency, and then you started a software. Like,
you know what? A lot of people want that switch, right? A lot of marketers and marketing agencies think about starting a software company because they think it's more productized and more scalable and all of these things. And truthfully, I knew nothing. Now, I had started a software company before. It wasn't fully software. It was more of an app, a mobile app. So I understood a little bit about the kind of development process and the development cycle and stuff, but it wasn't anything kind of crazy, versus what I'm building now, which is an analytics software, which is on another
really
level.
Crazy.
Yeah. I was naive, man. I'll be very honest. I didn't know anything about what it would take to build a software. I didn't know how much money it would cost. I didn't realize how difficult it would be to really build the software. I didn't realize, one of the things that you do in a marketing agency is you always think about retention and we stack monthly retainers and all that stuff. But it's, when you're stacking $3,000, $5,000 monthly retainers, yes, it hurts when you lose a client, but then getting another one, you're still making $3,000. When it comes to software and you're stacking $100 a month or $200 a month, or maybe up to $500 a month, whatever it is, you don't realize how important churn is and how hard it is to get somebody to adopt a tool. Like, it's so freaking hard, man. It's really
fucking crazy is what it is. That's
what
it is. Because I'm in the same boat, man.
It's tough, man. It's tough.
So you went from marketing agency to software CEO. Talk to me about like your first year as a software company, right? Obviously, it took you. How long did it take you to develop Funnelytics? I guess until you launched. Maybe an MVP version?
Until we launched the MVP, it was probably about a year of a part-time engineer kind of building some things. And then it kind of started becoming a little bit more full-time for half of a year. And then we launched. So one of the things that I did at the very beginning was I sold a lifetime license to our software. And the way I decided to do that was basically I knew the software wasn't ready. Like it wasn't anywhere near at a stage where it made sense to kind of start charging on a monthly fee. And I kind of just did some mental calculations. Like, okay, if I'm going to sell this for $99 a month, at the stage it's at, no one is sticking more than 2 months because it doesn't even work. So let me sell a lifetime license for $700, or I think it was like $600. So let me buy basically 6 months up front, get a whole bunch of users, get them bought in, bring in some money. And it worked really, really well. We built a community, we launched it. I think we made just over $200,000 in about 48 hours when we did our first launch. And
48 hours.
48 hours.
Let's take a pause right there really quick. How did you generate 200K in 48 hours? Go into the details really quick.
Okay, let's break it down. So let's take a step back. So in December of 2017, I had a first prototype of my tool. And the way that Funnelytics works is basically you have this canvas where you can map out your customer journeys or your funnels. You have little icons to represent a page or traffic source, etc. You can connect them together and it kind of creates this nice visual of your marketing funnels. And that was live and kind of ready to go. But my vision was always, okay, how do I overlay data on top of this? Hence the name Funnelytics. I wasn't very clever. I literally took the word funnel and analytics and smashed them together, and that was it. So I showed a friend of mine the mapping tool. And I kind of just showed him, okay, like here's what it does. And it's really cool, really easy to map stuff. But like I'm starting to work on this analytics part and it's not really working yet, but it's getting there. And he kind of said, hey, this mapping tool is really cool. Like I understand you're building this analytics thing and that's really awesome, but the mapping tool is really cool. Like you should give away that for free. So I was like, okay, well, it's not a bad idea. It's a nice, lead magnet in a sense, and it's going to build some goodwill and hopefully those people will want to buy analytics. It kind of makes sense, right? So I started advertising the free mapping tool. I spent about $10,000 and
running ads
straight to the mapping tool. And when people would create their account, the first thing that I did on the thank you page was send them to a Facebook group. So I put everybody into a Facebook group, and basically between, I think the date was December 7th, 2017, all the way up until February 7th, 2018. 2 months, literally to the day. All I did was run ads, about $10,000 worth of ads, get people into this free mapping tool on the thank you page, put them into the Facebook group. I think if I remember correctly, it was about 6,000 people who signed up to the mapping tool. Wow. And about 3,000 people who actually joined the Facebook group.
You had 6,000 people sign up from 10K in ad spend?
From 10K. That's the nice thing about having a free tool that is very easy to use, and people just started talking about it. So our cost was like $2 to get people to actually sign up to the mapping tool. Overall, the cost. So
just as a side note, who are you targeting? Who's the audience?
Marketing, like mostly marketing agencies. These were like freelance marketers, small marketing agencies, the Russell Brunson ClickFunnels crowd. Basically, like I would target Russell Brunson, and Russell's talking on about ClickFunnels over here and how it's important to have a funnel. And then here's this tool that makes it super easy to draw funnels. And this, again, around 2017, peak kind of ClickFunnels time, and it timed really well. And there was no other way to map your funnels other than like a PowerPoint presentation or a piece of paper, basically. So
6,000 people inside of a Facebook group.
No, 3,000 people in the Facebook group, 6,000 people into the mapping tool. But here's what I did over the course of those two months. Every day I would record videos, I would make posts, and I would create content and build a ton of goodwill. And every little once in a while, I would sprinkle in some like snippets of the vision of Funnelytics, this ability to overlay data, right? But because I didn't have it yet, I didn't have anything to sell them. All I did was give them value. I would record some trainings on how I grew my agency. I took a lot of my stuff from my agency and started templatizing it and giving it away as like PDFs and proposals and stuff like that. I would host webinars. I would do interviews. So I just kind of kept going, and I would do a ton of Facebook Lives.
Momentum.
Exactly. I just kind of kept going with the momentum. And Uh, and as I was kind of teasing like this vision of Funnelytics and what you could do with this tool, people kept getting more and more excited. So on February 7th, which was exactly 2 days, 2 months to the day from when I started advertising, I said, hey, I've got 100 spots open for this beta group for Funnelytics. It's going to be a lifetime license. You get access to Funnelytics Pro, and you get unlimited tracking, unlimited whatever. And I thought it would take
1997.
me, yeah, I thought it would take me like, I don't know, a month to get 100 people. Like I had built goodwill. There was a lot of like momentum in the group. People were commenting a lot and stuff. I thought it would take me maybe, yeah, a month to get 100 people, right? Um, it took me 48 hours to get 300 people. And each of
Crazy,
them
dude.
paid us $700. And basically it just created this massive momentum. Like I didn't expect it. I posted in the group, I said it's open. And then like
How old were you at the time?
I was 2018, so 32, 31.
31
Yeah,
years
I'm
old.
old, man. I look young, but I'm not young.
Oh, so that's
I,
young, dude. I'm 35.
you're
Uh,
35?
I'm 35. Yeah.
Yeah, so I'm older than you. I'm
All right.
I'm 37. So
Okay.
um
But but how does it feel being, at 31 years old, and this is brand new because now you're in the process of transitioning, right, between like agency and software, and it's like 200K and 40. Most people would like that's life changing, dude. That's crazy.
it,
200K,
it was
48
it,
hours.
it was like holy crap, right?
Yeah, it's like a holy crap moment. Like, wow,
It was holy crap. Like
it's not even like this is working. It's like this is fucking working.
yeah, this is working. Like people
Yeah.
clearly want this. Um Now, we'll get to the pain.
Yeah. Oh yeah,
And
we're gonna get to some
that
pain.
was
We all
that was
got
a
pain.
really it was a nice moment. And we ended up doing like about $1.5 million in those first 12 months. So like from a just selling, just continuing that same engine of people, Facebook group, etc. I
Were
found a
you
way to
did you
kind of
continue the lifetimes to get to that
I
1.5?
continued the
Okay.
lifetime for almost a year
Wow.
and a half
Lucky
before.
users.
Yeah, I know. Like
Cuz
it's funny. A lot of them still are kind of like upset when things change because anyways,
we'll get
we'll
into
dive
it.
into that. It's crazy. It's crazy. Lifetime buyers are an interesting breed. Some people are extremely grateful, and others are like, "Wait, what do you mean you're changing this?" Or what do you mean like it's like you paid $500 one time for something that people are paying $500 a month right now for,
Yep.
right? So it's like, give me a break. But anyways, it was life changing for sure. It made me realize what was possible when you build a community, when you build some momentum, you build goodwill. But it certainly didn't give me a proper understanding of whether or not people cared about my software.
Cuz it was a
It
one-time hit. One
because it was a
time.
one-time payment,
Yep.
right? And that one-time payment was a nice kind of, but it was a lot of them was a lot more FOMO than it was anything else. I don't want to lose out on this potential game-changing thing. I
Well,
actually,
because you also stem from being a marketer too.
yeah, well, and I
You're a
was pretty
marketer and a
good.
salesperson.
Like I was
Right?
pretty good. Like the pitch was really good. It was dialed in, and we definitely did a great job making that happen. But like even I think it was like last week or 2 weeks ago, I got an email in our support of like a founding member who paid back in 2018 still hasn't used the platform, right?
Wow.
And like it shows you that like it's false positives. The money was nice, and it allowed me to build an engineering team and start building a company, but it wasn't a true business. It was just one-time payments.
Yep.
And
It gave you the money that you needed to start your business, to really start.
it gave me the money I needed to feel confident to stop my agency and stop relying on kind of
Also true.
the service side, and it gave me the money to really hire some developers and to really kind of build a company. But it didn't give me true understanding of what am I building really? What is this, and who is it for, and what is the real value that people are going to pay for on an ongoing long-term basis. A lot of the value was this incredible offer that I had crafted, including a lifetime deal to my license, including these courses, including this. And it was just an irresistible deal where people were like, well, I'd be stupid not to pay this money, right? And it worked, but it didn't help me better understand. So those first 2 years of Funnelytics was very much we made a lot of money. We learned a lot, but we also had no idea what we really truly had. It wasn't until I switched over to an actual SaaS model where now we started realizing, oh fuck, like this isn't
LTV,
really what I thought it was.
MRR, churn.
Yeah, and
all these fun little metrics that
all
you,
these fun
you
little
learn
metrics
about along the way.
It's crazy, and you start realizing, okay, maybe people don't care about it as much as I thought they did, or maybe people aren't actually buying or adopting this tool as much as I thought they did. And I learned so much about, when you're dealing with customers versus clients, difference being a client is somebody you service and a customer is somebody who just buys and uses. You, with clients, you speak to them. And I still spoke to my customers. I would get on, but they're all so different, right? None of them are exactly the same, versus when you're working directly with a client, you can kind of learn as you adopt. The difference too is when you're building a software, all of your feedback takes time to actually start to implement, yep. Right? I got to go build this shit now, and it's going to take 3 months. Yep. And then 3 months later, you release it, and all that time has passed, and you've learned some other crap, and
it never changes.
It never fucking changes, right?
It's iterating, and
it's tough.
It's the software cycle, dude. It's funny because we were cleaning up our Jira board like 3 weeks ago. Yeah. For those of you guys who don't know what Jira is, it's just a project management system for developers. Think about it like that.
Yeah.
So we were cleaning up our Jira board, and dude, we had tasks in there that were like over a year old. Yeah. That we put in there that were just still in the pipeline, right? And it's like, and that's why I'm saying I'm resonating with what you're saying, because you want to create these features and push them out into the market, but you're restricted by the amount of developers you have, the speed of development, things like that. There's a lot of things that can hold you back, but yeah. Anyways, go ahead and continue. So 17. Yeah, go ahead.
You know what's really, I think the biggest challenge that I faced in the last few years is bringing my own ego out of the equation. When I built Funnelytics, it was centered around my idea. And my idea had all of these features, and these features were for me and my own ego and what I wanted. And then I started realizing, man, what I want and how I think is not necessarily how the market is thinking or what the market wants. And that's been a big kind of mental shift. So looking at that product backlog, you're like, I want this, I want that, I want this. Yep. I want this tool to do all of these.
Like a kid in a candy store.
Yeah, exactly.
Grab shit and throw it into the cart.
Totally. And then you realize, oh man, first of all, none of this works. And like every one of these features is built half-assed because we're trying to build too many of them simultaneously. Every one of these features speaks to a slightly different person who has a slightly different job to be done. So therefore it doesn't speak to anybody. And it just creates this kind of crazy mess. And that was our first version of Funnelytics.
V1. Craziness. That was 2017, and 18, right?
Yeah, 2018 was the launch of like and then 2019. So 2018, 2019.
Okay, got it. And then going in, and I've known you now for, I don't know, probably over 5 years, I think.
Yeah, around that time.
Like the beginning of Dashlix is when we first met. Yep. You've been on podcasts. You've been on webinars of ours in the past. I know. So, all right. So what happens after that? So at one point, I know you also went through a round of funding, right? You went through a round of funding. I remember one day I called you because I wanted to learn more about it. I wanted to see what the process was like. Hey, real quick, if you're a marketing agency or a B2B service or software provider, Dashlix offers white label fulfillment services and software to businesses just like yourself. Go ahead and create your free Dashlix account. I went ahead and left a link in the show notes, or you can just go to dashlix.com. I was
Yep.
so I was so fa- I was fascinated by the process of funding. Like,
Yep.
what makes an owner go through the process of, one, why do you want to fund? Because a lot of owners are greedy and you want to keep all the revenue and you don't want to, give percentages or equity to, VCs, right?
Mhm.
So it's like a lot of owners will try to do it themselves. Like, what in your mind made you want to go through the funding? And if you can also talk about, I really want to talk about the process. I remember you telling me it takes a long time. Like, people underestimate the amount of work and time it takes to actually raise capital,
It
right?
takes a really long time. It's a lot of effort. It's a lot of think of raising funding as selling somebody on a $2 million offer. Like, how
Mm,
long is it going to take you to convince somebody to buy something for $2 million? That's really what's happening, right? Think of an investor as a customer, a prospect as an example, and
wow. I didn't
what
think about
they're
it like
paying
that.
for is a piece of this business for $2 million. So
And that's what you raised, right? You raised two.
I raised 1.5. I raised a total of 3.3 million. Yeah.
Wow.
So, but that's the mentality that you have to have, right? So, okay, how long is it going to take you from the initial conversation to getting somebody to actually write you that check and put it into your bank account? Well, they're not going to give it to you without doing a whole bunch of due diligence. They want to understand the story. They want to understand where it's going. They want to understand how this money is going to help you grow. And they're, at the end of the day, they're a customer in a sense. They're an investor, but think of them as a customer. So what is their reward here? Why are they paying for this? Well, they're paying for the upside. So you've got to craft that entire narrative. You have to have those conversations. You have to have those pitches. You have to have the rejections. And it's the same thing. It's like running a completely different business
That's crazy.
simultaneously, right? It's just this customer is now worth $2 million versus these customers are worth whatever. And it's not really a customer because they don't care about your product. They just care about the business metrics
And the outcome, yeah, the
and the
metrics.
outcome. So I'll
What
tell
what
you
made
why I
you
started.
want, before you go through, like, yeah, what was the reason? What was your why?
Yeah, let me
Why?
let me let me tell you the why. So I was actually here. I'll show. Let me show you this. Actually, I have it right here. So I had just written this book. Okay, so this is basically my year of launch at Funnelytics. So it's Funnelytics Chronicles, and everything I was doing was basically bootstrapped. Like, I had documented a lot of it. It was all centered around me, and the reason I was able to make so much in those first 2 years was because I was posting all the time, and everything was centered around me as the founder, right? So everything was founder led. Um, and with some of the money and all of that stuff, we were kind of still, even though we were growing, we were still very much reinvesting all of the money. I was hiring more developers, and things are really expensive. Software is not cheap. Like, you keep going, you're like, frig, man, how much money? Like, I can't keep selling these lifetime deals. Like, it's not generating enough cash.
Yep.
So we need to move faster. I went to St. Lucia with my wife. It was our 5-year anniversary. And in St. Lucia, I brought one book. Okay. This book was called Blitzscaling by Reid Hoffman, who is the founder of LinkedIn. Okay.
Oh, wow. Okay.
Now he's one of the top VCs in Silicon Valley. And in hindsight, knowing that he's a VC, this book makes sense. But as I'm reading this book, basically it's called Blitzscaling, and the idea is that when you're a technology company that is revolutionary and that is basically doing something quite disruptive, if you don't blitz scale, your competitors are going to come and eat you. That's basically the thought process. So you should raise money and you should scale as fast as you can, because if you're not scaling, or in his words, blitz scaling,
Yeah.
you run the risk of losing, right? Now, again, he's a VC, so it makes sense because he's basically saying, come to us with your best ideas and we'll invest in them. And at the time, I had this duality in my head. I was like, okay, this is really expensive trying to build this company, trying to scale this. I'm selling these lifetime licenses. We're making money, but fuck me, it's a lot of work kind of doing these pitches all the time. and doing these promos and these launches and all that stuff. These engineers aren't cheaper. In fact, I need more of them. So what should I do? Should I keep going with the idea of I own 100% of this and it stays as kind of a lifestyle business? Or do I take the advice from this book called Blitz Scaling and find a way to blitz scale? Sounds good in theory, but that's what sparked my thought around, okay, you know what? I'm going to go in and I'm going to actually go and try to raise money.
How did you do it? What was like let's say in your mind you got the check mark. You're like, all right, I'm doing this blitz scaling thing.
Yep.
Right? Where did you go? Who did you speak to? What do you like? What do you even do from there?
Yeah, it's good. It's a good question. In the same thought process that you have, where if my goal is to get my first few customers, how do you go and get your first few customers? You're not going to build a funnel. You're just going to go to your network and you're going to ask, who do I know that knows VCs? That's what I did. So I started there, and a friend of mine knew a VC here in the city. I met with them. Then I started setting up some meetings with other VCs in the city, just kind of cold emailing them and just seeing if they were interested. And I kind of got some feedback.
You were full force into finding somebody.
Full force, right? This is 2019.
You got the check mark going.
Yeah, I went to St. Lucia in 2019, in summer 2019, and I started, as soon as I came back from there, I started, okay, you know what? Let's go for it. Let's try to raise some money and see if I can take this to.
And did you know what the amount that you were looking for? And
1.5.
the percentage that you wanted to give away? You knew that?
I didn't know the percentage. No, I didn't know the percentage.
Okay.
It didn't work in the same way, like as like a Shark Tank.
Yep.
In a sense, like I didn't know that I wanted, and it doesn't work that way anyways. But I knew, I kind of was like, I'm going to raise about 1.5 million. That was kind of the thought process. In hindsight, I actually probably raised a little too little. And there's a bunch of stuff I can dive into there. But that's what I started with. So I was like, okay, the first intro was from a friend to one of the VCs that he knows and he was kind of partners and friends with. So that was kind of my first meeting because I had this warm intro. Then I started having a few other discussions and I started getting feedback.
You had a pitch deck?
I had to build a pitch deck, and I spent time building a pitch deck and trying to learn as to, okay, what's the best way?
Just building the pitch deck itself
is a pain.
You need all the unit economics of your
You need all the metrics.
A lot of the times you don't have those things.
You don't. Now,
unless you have Funnelytics.
Well, Funnelytics will only tell you units about your funnel, nothing else. Now, here's the thing, though. When you're raising a seed round, which is basically your first round of funding as a startup, it is 80% about the founder and the story, and 20% about the product and the actual unit economics.
Yeah, because they want to see that you're legitimately,
because it's a big bet, right? When you're at a seed round stage, like there's no proof really. Like a lot of seed rounds are pre-revenue. A lot of seed rounds are, in my case, all of my money was lifetime. So they saw that I know how to market, B, that there's clearly a founder problem fit there. Not necessarily a product market fit, but at least as a founder, I understand why I'm building this tool.
Yep.
And there's some high level traction here, right? So, but it's still a major bet. Like, is this going to work? Is it going to be sticky? Is this going to grow fast, etc.? Unknowns, right? When you get to a Series A round, which is kind of the next one, those numbers kind of go 50-50. I need to see 50% the numbers work, maybe even closer like 70-30, 60-40.
By the way, just real quick for context for the people that are listening, because I know they're going to have this question. What's the major difference between seed and Series A?
Okay,
right?
so
is it like monetary? Like, it's usually the amount that you're looking for?
It's the amount that you're looking for, and it's where you're at in your journey as a company. So typically, a seed round, your pre-revenue, very low revenue, your pre-product market fit.
Yep.
So you're still trying to figure out where's your market and how to take it there. Series A, you're at product market fit. You've proven that you know exactly your ideal customer and you know how to get them, right? Those are the two key aspects of it. And typically you're going to be sitting at around 250,000 in monthly recurring revenue. And there's proof in the motion. So we're growing, we're moving in the right direction. We know we have a channel that's driving these ICPs, and we understand who is our user and their stickiness to it,
Yep.
right? And then you're usually raising a kind of $10 million check. And then you get to Series B and C and all that stuff. And that's when you're raising even more. So that process basically, me speaking to a whole bunch of investors. And eventually I started right after summer. So in the summer of 2019. And I closed the round in April of 2020.
How long is that? Like 8 months? 7, 8 months?
Yeah, about 8 months. No, not even, maybe 9. Right.
9
So
months. So
like,
from you looking to actually getting money in your bank.
Probably about 6 to 9 months, somewhere around there. I don't remember exactly when I came back.
And how many people do you think you spoke to that you did the pitch?
I pitched to. So it doesn't work in a. It's interesting how it works. So what you'll do is you'll get a lead investor. So let's say you're trying to raise $1.5 million. An investor is not going to come in and give you a check for 1.5. That's very rare. It might, but it's rare that it happens. What they'll usually happen is basically I'll come in as the lead investor and I'll set the terms. So I'm going to give you a check of $750, and I want, let's say, at a $4 million valuation. So I want whatever, 20% or whatever it is, 10%, et cetera. You're going to now need to go and find the other 750. Now, we will activate our check if you find a minimum of $1 million, but we're allowing you to raise up to 1.5, let's say.
So they set all the terms basically.
Exactly. They set all the terms, right? And then you have to go and pitch a few more times and find and be like, I already got this lead over here. We're just looking to fill up the rest of this round. And that's basically the process.
So that's what you did. You found that one person who threw
I found that one lead.
The big portion.
They gave the first check. They set the terms, and then I went and kept pitching to different VCs to raise the remaining balance.
Now I hear stories and I hear people that have literally pitched hundreds of times to close their, like how many people have you pitched to close that first seed round in total?
So I was pretty fortunate that first intro that I had from my friend to that VC, they were quite interested from the beginning.
Was that the person that closed the first?
That was our lead VC. So it worked out quite well. I still had to pitch they didn't say yes right away. It took a while. It took a couple of months for them to, let's see how your numbers go. We want to kind of see you shift over to monthly recurring and stuff like that.
So you had to make changes along the way.
Of course, you got to keep operating. So not only are you doing this, but you got to go and keep building your business and do things, right? And what was interesting is I actually made the switch to monthly recurring during that process. So we went from lifetime to recurring revenue.
You stopped lifetime.
Huh?
You stopped the lifetime completely.
I stopped lifetime. I basically said this was the end of the lifetime, and then we switched it to over annual recurring, and then monthly recurring, and all of that momentum of like people who are waiting for monthly got in. So here's what happened. Basically, right before, like, I was already in talks with these VCs. And we were kind of on the fence, and they were kind of sitting there like, there's really no proof here. Like, this is pretty risky. Like, you sold a lot of lifetime licenses, but none of that money's coming back to you. So like, we don't know. And then because I had built this community over 2 years, built this group, built this momentum, all of these people who were kind of sitting on the fence, who like didn't want to pay the $700 for lifetime, but were kind of waiting for it to kind of be a monthly thing.
Closing the doors, they're closed out.
Yeah, but as soon as I opened up the monthly, we got a massive influx of people coming in. And this was like
Because they wanted to
literally
try it probably without paying.
exactly. They just
Yeah,
wanted to try it without committing
yeah, makes
$700,
sense.
right?
What was
Now,
the monthly? What was the plan?
$99 a month
99 bucks.
is
Well,
what
yeah, you
I
see, like
started.
that. So instead of paying 7 times the amount, right? So they jumped
Precisely.
in for $100,
They
and they wanted to
they
try
jumped
for
in
a
for
month or
100
two.
bucks. Here's what happened. So we make the switch. This is about November-ish, 2019. And when we made that switch, our MRR started going up really quickly because all these people were just sitting there waiting. And so it started to buy. And then I get to about January, February with the VCs. Now it's set. Terms are in, everything's signed. We're just waiting for the legal documents, right? So they've done their due diligence. Now it's just about a matter of lawyers back and forth waiting. And that takes another 6 weeks before all that, hence why the money came in April. But already things were set. And because I had built 2 years worth of basically like pressure, our monthly recurring kept happening. Then March hits, which is COVID
Oh
2020.
God.
And then churn goes like this. It starts to go down, right? People are starting to cancel fast. I'm like, oh, fuck. And then as I'm seeing this, I'm not hiding it from the VCs, but they don't yet have, the deal isn't closed because it was closing in April. So we close in April, and like my revenue is going like this, like it's going straight down basically. Eventually, it starts to flatline a little bit near the bottom, but the money's already in the account at this stage. So it's kind of like one of those situations where it's like, sorry, like I didn't fucking
Nobody
know,
knew that
right?
was gonna happen.
I didn't know that this was gonna happen. But that made me fucking realize a whole lot of stuff. Like, our product is clearly a nice to have and not a necessity at this stage because COVID hit and it's first thing that they're canceling, and it just became this crazy like loop of now, okay, how the fuck do we figure out churn? How do we create retention? How do we solve these problems? What features do we build? At least we've got all this money in the bank account now, so we can actually start
What did you
building
do
and
with
thinking.
that, by the way? Money hit the bank account. What was like the first thing you did? Did you go pop a bottle at one of the clubs?
I did celebrate with friends. And I was like, look, man, this is amazing. It's a great achievement, but it's actually a really weird feeling to go from bootstrapped, where every month you're like, oh fuck, I got to do another promo, and it
I know how
changed
that
my
feels.
entire mentality, man. It changed everything in my mindset, because now I opened up my bank account and I'm like, man, there's $1.5 million in here. I don't have to go and do this launch. I don't have to record this video over here that I don't want to
Do
record.
you
And
think that? Do you think that it was bad?
it was very bad.
Okay, because I
I
see where
think
you're
it,
getting with this. Yeah,
yeah.
you got more comfortable, which is not good
Um,
sometimes. And
I wouldn't say comfortable. I would say that because it's not like I slowed down working. I just worked a whole lot more behind the scenes as opposed to on the front end, etc. Right.
yeah,
So it forced me. What it did is made me kind of focus a lot more on the product, on the customers, and a lot less on the marketing, which is a good thing, because I was basically marketing something that was just a leaky bucket at the end of the day. But I had to, because if I didn't, then we weren't making enough money and
yep,
I would have to let people go.
yep.
Um, However, what it did do is basically, I don't know, it made me start to realize that, okay, when you have that kind of money in a bank account and the people behind that money are saying, okay, spend it now.
They want you
Right.
to spend. What was they? If I'm not mistaken, they give you. I think it's like an 18-month run rate, or they give you like some type of run rate, and they want you to spend all the money within that time.
Basically, right? So they want you to raise
Start
your
burning
next
money.
round in about 18 months.
Yeah,
So basically, your goal is to grow fast enough to hit the right metrics so that you can raise your next round in 18-ish months, 18 to 24 months, right? So now you've got to take this 1.5 million, you divide that by, I don't know, whatever 18 months is. So 1, 2, 3, 4, 5, 6 divided by 18 is, 83K or a little bit more, or whatever it is. So now you're basically increasing your burn to make that happen. So you're investing in product, you're investing in, and you got to kind of decide, well, where do I want to invest? Where do I think it's going to make the biggest impact so I can grow and I can take it to the
And were
next
you
level?
burning every month, or were you
Uh,
profitable? Every
no,
month
every
you're
month we
burning,
were
right?
burning every month
I
because
mean, it's normal.
it's normal. You're
Yeah.
taking that money and you're putting
You're
it
literally an
up
extra
front.
100K a month to just burn every month.
Just burn, basically. Just
Wow.
use that money, hire people, hire more engineers, use it on marketing if you think that's the right move. And nobody's giving you a playbook, right? There's no like one size fits all. It's use your discretion. Here's this money, figure it out,
So
right?
they didn't. I know there's certain types of VCs that are like they also like instill employees, like leadership teams in your organization,
Yep.
or they're literally like working with you, doing calls with you, like figuring out stuff. Was your VCs doing that, or they were just like, here's
No,
1.5,
there's very
figure it
few
out?
VCs that will do that. Very few
Wow.
VC, like they'll have a board seat. So now I have to start board meetings, right? Every single quarter. So as soon as the money comes in, every quarter I have to report back. So it kind of keeps you accountable in the sense of like I have to reflect back every quarter on like what do we do, what are the metrics we're hitting, where are we going, etc. But it also kind of puts this weird mindset because it's not as though because you don't want to go back to your board and be like, this quarter was shit, right? So
Yeah.
you're trying to figure out how do I position this in a way that it was bad, but it was also good. And these are the, even though, because you're just sitting here reporting back to people,
Yeah.
right?
It's tricky, man.
So it's like reporting back to your boss. Like if imagine you have a boss, you're not going to go back to your boss and be like, yeah, so clearly I suck at my job and this quarter was shit and my or not. It's like no. We did all these things. These things didn't work over here, but I can see some momentum over here. And you're trying to figure out how do I tell this story in a way that makes sense.
So
So
so 18
go ahead.
months go by,
Yep.
right? You, I'm sure, hired, spent money on marketing. I'm sure probably what, like big majority went to payroll.
Vast majority went to
Okay.
engineering.
Yeah, engineering makes sense. 18 months go by. What happens next?
Huh. So 18 months go by. First, in about March of 2020, sorry, March of 2021, I lose my principal engineer, the person who built the foundation of Funnelytics. He decides to leave, and I have no one to replace him. So now I just have a handful of engineers who are kind of free flowing. Like they've got no leadership. I'm not an engineer. I don't know what to do here. So it took us from basically March until August of 2021 to find a replacement. So for about 6-ish months, we were stagnant. Like we had engineers, we hired an agency, burned a whole lot of money, and it was useless. It was a mistake. I shouldn't have done that, but I was like freaking out and figuring like, what the fuck do I do?
Yeah. And at the same time, by the way, just for the audience so they understand, at the same time, you have users using the platform.
100%.
You have tickets being opened. There's bugs being reported.
There's
like
lots.
It doesn't stop. I just want to make sure everybody's on the same page because I know what you're talking about.
The churn is still happening.
Yeah.
We're still acquiring customers. They're still churning. We got to fix these things. And
Yep.
and for about 6 months, we have no leadership and no real engineering team. Right. So now things are like, oh, fuck. Okay. So that took us 6 months. Then we finally find a VP of engineering and take it for another 3 months for that person to ramp up and to start rebuilding the team. That takes us to about October-ish.
Like
now, almost a year. Now, here's the problem. When I raised the first round of funding, I made the decision to rebuild Funnelytics. So I went and built Funnelytics 2.0.
Yep.
So while people were still signing up to 1.0 and there was all these bugs and these issues, we decided we're not going to keep building 1.0. We'll fix bugs here and there and stuff, but we're really going to spend all of our time building 2.0. And now there's a gap in time right here of like, okay, well, we can't build 2.0 because nobody's leading this. And but we're still learning from 1.0 and building 2.0 in the way that we feel will have a stickier product and all that stuff.
How long does it take to build 2.0?
It took us 2 years.
2 years. Same
Yeah.
here, by the way. We went from DashX 1.0 to 2.0. There was a
Yeah.
2 year gap. About a
Yeah.
2 year gap.
There you go. So now I'm still burning money. We're growing, but not fast. And while we decided to transition from 1.0 to 2.0 from a product standpoint, I also decided to transition my business model. So instead of going after small users at $99 a month, I figured, okay, well, can we figure out how to get bigger companies at a much higher price point who really care about performance and all that stuff? So we started building a kind of a sales team and a sales-led approach and all of that, and experimenting and testing there. And we were starting to see some traction there, but we were still onboarding people in 1.0 and using a flawed and broken product to some degree.
How would you
And
say the overall, just if you fast forward, the overall of the slight, call it enterprise or whatever you want to call it, right? That approach, was that better or worse for the business?
I think overall it's the right type of customers. It didn't work for our model. We had the free mapping tool that was driving all of our leads, but there weren't enough big clients coming into the mapping tool.
Gotcha.
So it didn't work for how we were generating traffic and what was driving our core.
It's almost like you had a lead magnet that wasn't pulling the right leads in for you.
Precisely.
Yeah.
100%. We had a lead magnet that wasn't pulling in the right leads. So we needed to figure out how do we get better leads, but we still had this massive pool, like with 7,000-ish people signing up every month to our mapping tool organically,
by the way,
not
that's
spending any
insane.
dollars.
I remember you told me that a couple of weeks ago when we were talking. I still find that insane.
I know it was insane,
like,
and it's still like a lot of traffic, but it wasn't the right type of customer for us to sell on these high tickets. So we were only closing 10 to 15 per month at like $500 to $1,000 on monthly, right? So it was growing, but it wasn't growing fast enough, especially from a VC style type of business. So now comes December 2021, and I'm basically out of cash. I have no money left. We've burned through it. It was from April 2020 all the way to December 2021. So I go back to my VCs. And I'm like, okay, like obviously I'm having board meetings this whole time, so they're up to date. So they decide that they're going to put in more money because we haven't had a chance to launch Funnelytics 2.0,
and they're invested.
And they're invested now, and like, okay, there's clearly some traction happening here. So they put in more money in Funnelytics, and we raised kind of another set of funding, and we launched Funnelytics 2.0 in May.
That was another 2 million.
They put in another just shy of 2 million, yeah, about 1.8 or something like that. So
How'd you feel after that?
Huh?
How'd you feel after that?
Less excited. More like...
More pressure, maybe?
Yeah, more pressure and more of like a feeling of I'm doing this to stay alive and not, kill everything we've built for the last year. But the numbers weren't anywhere near ready for a Series A. Right? Like we wouldn't have raised a Series A because we were basically restarting with this bigger segment.
And when you raise, by the way, when you raise with the same VC, you're not going through a 9-month process again, are you?
No,
right?
it's faster,
like
right?
Thing.
All it comes down to is, okay, well, what terms? So like at first you still have to do the pitch. You still have to go through that. You still have to go through the legal aspect of things. You still have to speak to the board and all that stuff. And then they're going to come back and say, all right, look, we're going to put in more, but it's going to be at this valuation or whatever it may be, right?
Yep.
And so overall, we increased the valuation, and because we did build a whole lot of stuff, and we were just kind of getting ready to launch Funnelytics 2.0. So we launched Funnelytics 2.0 in May of 2022. and we've raised another $1.8 million. We're still burning. And now it's like, okay, go time, right? We've got to take this 1.8 and get it to a stage where it's growing fast enough for us to basically for us to raise our Series A, right? So we start accelerating kind of our operations. We start spending some money on marketing and testing different experiments. All the meanwhile, yes, we launched Funnelytics 2.0, but as you know, when you launch something, it doesn't go according to plan.
Never.
It doesn't work the
Never at
way
all.
that you thought it would work. So there's still bugs. People aren't adopting it the way we expected them to. Some power users are giving us some feedback and saying like they love it more than 1.0, but overall this is missing and this from 1.0 is missing and this and that. And it just creates a new backlog of issues all the way through to the point where basically in 2023, we've run through all this cash. We're basically burning, and now we've gotten to a stage where we can't raise the next round. So I had to make a whole lot of cuts, take it all the way back, and even though we've grown, even though the numbers are still moving in the right direction, it just wasn't fast enough for venture level
Yep.
scale because our
Now you're
churn was still
back in
too
it
high.
though.
Huh?
How does it feel to go from starting something to going through like that whole funding, burning money, and now back at like, okay, like we're gonna do this again, but the right way? And I'm asking that out of all respect, because I've been there, I've been up and down in our business at Dashlex, so I'm just curious to see. Obviously, we didn't do any funding yet, so minus the funding part, but like,
Um,
where are you at right now
I
mentally?
think
Is like,
I
are
think
you
it
like ready
makes
to?
I think it makes you doubt yourself a lot. It makes you sit back and say, "Man, what am I fucking doing wrong?" Especially because of social media, and you look at, you see everybody sharing their wins of like from 0 to 20 million in ARR in 5 years, and you're like, "What the fuck did this person do? And how did they do it? And what worked? And why aren't things working on our end?" And you read all the books, you do what you think is going to is the right moves, and so I think it made me doubt myself a lot. It made me doubt my vision for this product and for this business for sure. It took me a good year, so from basically early 2023 to now, to reset Funnelytics, to kind of get back to a stage of like, why am I doing this? What am I trying to prove with this high, fast growth? Who is this for? Like a lot of these questions I had to kind of come back to really truly understand what is the purpose in a sense? What is my why behind all of this? Um,
What is it?
Truthfully, it's this product. I genuinely believe and love what we've built and the tool that we have, and I genuinely believe that marketers need a tool like ours to be data driven, to better understand why things are working or not working. And I'm very very attached to my product. What I've come to realize though is that isn't good enough, or that doesn't mean that you have a business. It just means that you have a product that you love, and it doesn't mean that people are going to use it. Doesn't mean that they're going to stick to it. And it's also made me realize what my strengths are and what I truly love to do versus what I've kind of been forced to do by being the founder and CEO
Yeah,
of this company,
I
right?
can resonate with that. What do you like doing? What's your thing? If you could,
Product, 100%,
product, huh?
100%. Like for
I would
me,
say the same for me too.
I love product. I love to look at my product. I love to work with my engineering team. I love to design the product. I love to speak to customers to figure out
Yep.
what's next in the product. Well, I
Oh,
very
you could
much
say it. Say
dislike.
it. You
Yeah,
hate. I
I
hate it
hate
too. I know
hiring.
what you're gonna say.
I hate hiring. I hate managing people.
Yep.
I hate building culture. I very much dislike the fundraising process.
Dude, most founders are like that.
Yeah,
More of
and
like creative, product
we're
driven.
exactly and it's gotten to the stage where I actually very much dislike the marketing
Yeah,
aspect of things,
I
right?
I agree.
I
I literally just did an interview with Kevin Hansen, and I don't know if you know who he is, but he does like all the videos for like he does like video. He has a video marketing agency. He does all the video and ads and stuff. He works with ClickFunnels and Russell Brunson and like all those guys. And I was telling him, I was like, dude, like I had to sit like the last like 2 weeks, and I had to. Who's gonna shoot the ads? Somebody has to shoot the ads, right? I had to shoot like fucking 30 videos, and I shot it too. I did it.
yeah.
Shot like 30 videos in like 3 days, and I was like, who the hell on earth would enjoy doing that? That's not fun. I don't
But
want to do
some
that.
people do, right? And that's the key. There are some
Not
people
me.
who love exactly, right? I'm
Not
not me
me.
either. And that's the thing. You
I
end
like to
up
whiteboard. I just hit my whiteboard and just hang out in my office and just whiteboard product
totally.
all day.
Me too. Whiteboard product. I don't mind. I love whiteboarding strategies and all that stuff when it comes to marketing strategies and all that. But truthfully, like in an ideal world, you understand where your zone of genius is, and you basically sit back and say, okay, let me find people who are better than me at these other things and who love it, who are that's their zone of
That's the
genius, and they
secret to
that
business.
is the secret.
That's the
And I
secret
think
sauce, dude.
the challenge with being solo founder, you're a solo founder.
I have 3 partners,
Okay, you
co-founders.
have partners. I'm a solo founder. The challenge is you end up being the jack of all trades for things, right? And then when you do raise money, you're trying to use that money to hire these other people, but sometimes
Yeah.
you've got to do it in the right order. So one of the mistakes we made when we raised, especially the second round, was we tried to build the operations and the team faster than the product was before we really had. So it's like, okay, we raised the round in January of 2022. We launched Funnelytics 2.0 in May of 2022. So what do we do between January and May? We built the team to be ready for the launch of anticipating that things
Got
would
you.
really go well, right? So we built we built the marketing team, we started building
You
this
built the
team.
machine, and the machine didn't need to be used yet.
Exactly. Right.
Yeah.
So I used that money in anticipation. That was the biggest mistake. I should have just said, okay, we're going to sit on this cash a little bit. We're going to build Funnelytics 2.0, launch it, get it. Like if I built the team today, now that we have 2.0, where it's really sticky and it's working really well for the right types of customers, now building the machine would make a
Makes
lot of sense.
Yeah.
Right. And building the team and finding the head of marketing or whatever.
Hey, look, dude. I know we're running out of time, but we all learn stuff in business. Your journey's definitely been inspiring. I've been watching
Yeah,
it
it's a lot of fun.
for years now. The ups and downs, it comes with every business. I think that's a beautiful
Totally.
thing about this podcast is like I get to speak to business owners just like you every single day, and people they think business is beautiful. It's perfect. You make a lot of money. It's like they
It's
don't.
not how
That's
it
the whole.
works.
This podcast is called Behind the Revenue, right? And people
Exactly.
just look at the money dollar, the money symbols. You're like, oh, this dude's making a lot of money. It's like, okay, why don't you take a look behind the scenes and see what it's really like, right?
Totally.
So, thank you, Mikael, for coming on. By the way, guys, for those of you guys, especially, I know we're our audience is a lot of marketers on here. So, guys, go check out Funnelytics. It is a great tool. I've used it. It's awesome, especially if you're looking to map your data and get some real time analytics going. Check them out. They're awesome. I know you guys opened up some new plans and you're playing around with pricing a little bit, so it's super affordable. Jump on in, Mikael. If they want to reach out to you, where's the best spot?
LinkedIn. Come connect with me on LinkedIn is kind of the best place for you to see some stuff that I post and reach out to me.
Awesome. All right, thank you, brother, and I'm sure we'll have you on again in the near future. Have a good one.
Cheers. Thank you, man.
Bye.
Bye.
Hey, do you want more of the Behind the Revenue podcast? Look, join our private Facebook group where marketing agencies from all over the world are sharing strategies, network, and scale their businesses together. Visit facebook.com/groups/dashclicks to get instant access. And also, if this podcast helped you in any way, please do me a favor, share it with friends, leave us a review on iTunes or Spotify. That really helps build our community.